Hi everyone, Donny Schulze, Embrace Home Loans here with your Friday market update. February 18th, a little bit after 5 o'clock. We've ended this week in slightly better position on interest rates than we ended last week. So that's the first time in a long time that we could say that. Does open up a little bit of hope. The overall trend is still for rates to slowly be increasing here. So we do want to keep our buyers in a defensive position. We want to be locking in rates. I've gotten a number of calls this week from buyers who were in contract end of November, December, and the lenders they were working with would only offer a 60-day lock, and they've been floating up till this point. Those buyers have seen their interest rates go from 2.875, 3% up to close to 4%. So we want to be locking. We don't want to take on risk. Most lenders are going to have a float down policy. But we do have some hope that there might be a small technical pullback over the next week, 2 weeks. I wouldn't expect to go much further than that. We could get some support from Russia Ukrain headlines. We talked about that last week. Inflation data came out on Wednesday. We saw rates go up another 0.25%, and then they pulled back because of the headlines that hit at 2-3 o'clock last Friday. That situation is not resolved. So if Russia does invade Ukraine, we could see rates move a little bit lower from where we are right now. My gut is that if we see Russia Ukraine invade, because we went through that back in 2016, I don't think the impact on markets is going to be very drastic. Maybe we see an eighth pullback. I wouldn't expect more than that. If Russia does not invade Ukraine, we could test the highs that we saw last Thursday and that we revisited a couple of times this week. So, rates were under pressure this week, and they've pulled back to, again, be in a better position than we were last Friday. Industry updates, nothing big. Fannie Mae, Freddie Mac, FHA. We've talked about the increased cost for second homes, the increased cost for high balance loans. We talked about the overlays for self-employed borrowers being lifted, which was great news. On the Embrace front, we are making a change to our Approved to Move Plus program. So if anybody's not familiar with that program, it's a full credit commitment. So we take a buyer's income, asset, credit documentation. We have our underwriters review and issue a credit approval. And then if the buyer is applying for a conventional mortgage, so it doesn't work on government mortgages, but a conventional mortgage, what we're trying to do is guarantee the value on the offers that they're submitting. So if a buyer sees a house, they want to make an offer $500,000, we're going to take that MLS data, we're going to take the data points on that property, and we're going to try to guarantee the terms and the value for the seller and the buyer. We're having a lot of success with it. We are changing the program probably starting next week to not require the borrower to go through the credit approval. So, we underwrite in 24 hours. That credit approval is typically pretty fast, but the borrower does have to sign their application. They have to get over the documents. It has to go to the underwriter before we could submit. So moving forward, we're going to change that. We are going to speak with the borrower, get the information we need, pull credit, get a pre-approval in place, and then we're going to be able to submit for that value guarantee on our conventional buyers. So that program's a home run. And how do we get offers accepted? How do we motivate buyers? How do we keep our buyers from getting frustrated with the market and backing out, right? They are seeing multiple bid situations. They're seeing prices go up. They're seeing rates go up. We really want to do everything we can to get offers accepted. So if anybody needs any help this weekend, I will be around. Contact information's in the email. Hope everybody has a great weekend. Talk to you soon.